Hi, this is Stuart Cooper with your mortgage market update for the week of August 26, 2022. And we've had a pretty volatile week, but at the end of the week, I think we all kind of held it together, even though I think rates are a little bit higher than they were in the very beginning of the week. We did hold our ground, and Thursday and Friday we did see some improvement. Today the market kind of ticked up a little bit, but we had some improvement yesterday, so it kind of balanced out. But you can see we finished off the week a little off. So let's just jump into this real quick, and we'll go into what rates are doing and why. So today, the Federal Reserve Chairman Powell spoke, and he basically said that they're going to continue the course, they're going to keep raising interest rates, and that's why we saw the volatility in the stock market today. And the stock market was off 800,000 points today. I think it finished off 1,000 points. So we saw, and usually when that happens, it's really good for the bond market because money's moving usually from the stocks to the bonds, and vice versa. So we saw the bond market was actually improving, and the news that was coming out was actually fairly friendly to bonds, which is kind of nice to see because we haven't seen that in a while. But it had to do with things kind of slowing down, the economy slowing down. So real quickly, let's just show you. I'll show you what this is. This is when the federal chairman Powell spoke, and you can see the volatility in the 10-year Treasury right here. You can just see this volatility. You can even see it more so on the mortgage-backed security side on the 4.5% coupon. So you can see, this is actually crazy. I don't think I've ever seen this happen. But you can see right before he spoke or the comments came out, and then all of a sudden the market just crashed, right? And then what this is showing me is it corrected and came all the way back up, right? And then it crashed again, and then it came back up and crashed again and came back up. This is in the matter of a few minutes. This right here. So I've never seen that before, which is crazy. But let's just talk about what's going on. So outlays, consumer spending is way off, right? It was forecast to be 0.4%. It was actually 0.1. So the consumers in the U.S. are definitely tightening their strings. They're stopping to buy stuff. And that's what that indicates. And that's pretty crazy. And then the core PCE inflation came down a little bit, just a tad, but at least it's not going up. At least it's going in the right direction. So it was forecast to be 4.7, and it was actually 4.6. So slight improvement, but you can tell, August was a pretty strong month for the economy, even though things are dropping. That the Fed's still going to have to raise interest rates, and that's once again is why the stock market sold off. Is because I think the stock market was hoping that there were going to be a little bit more easing up on raising interest rates, but it's not over, guys. Not over by a long shot. So down here on my key level, my 10-year yield. So we can see here, last week I was definitely in the red, showing higher interest rates. Now we're going into the green, and I think what we're going to be going into now for at least the next couple of weeks. And like I said, it's kind of hard to predict because any information can change things. But we're trying to trading sideways, so I don't expect rates to go up dramatically. I don't expect them to go down dramatically. I expect them to kind of stay where they're at. And this is going to be the new level for a while. So current rates are, about 4.75, I think it is, somewhere around there, depending on, there's a lot of variables for interest rates, but that's kind of where it's currently at. And then let's jump into here. So every week I send out a report, the weekly most important housing news, and there's some good information in here. So please, if you're interested, please let me know, and I'll add you to my list, and you'll get this every Friday. But let's just see what we're going at. So here's the volatility in the market this week. So you can kind of see, I'm getting kind of used to this. It seems like it's been like this for a while, but very volatile. And let me go down to, this was an interesting little chart. So this was the meeting. This is when the Fed Chairman Powell spoke and made his comments, and you can just see the stock market just sold off. You can see the interest rate, the 10-year yields came down a little bit. So that's good news. And then here's updated news for home sales. So home sales are still dropping off, and I thought this was kind of interesting because we all talk about 2008 and 2009 and the correction in the economy. And you can see here how dramatic the drop was. But if you compare it to the drop of 2022, look how more vertical this is. The drop is a lot more defined. It's almost vertical. And then if you look at pending home sales, you can see pending home sales are still on the decline. But the good news is housing inventories are definitely going up. So anyway, that's my update for this week. If you have any questions or comments, please feel free to add a comment. And have a great week, guys. Take care.